What's up? What's up, Sam? How are you?
Hey, how's it going, Yahia?
I'm good. I'm good. So today is the second official episode of Catalysts, a podcast where we try to get VCs and founders to talk about what they're up to, who they are, how they got to what they're doing, and what's next. So a little about Samuel Brown. The way that we met is right now I'm inserting at a VC fund called University Growth Fund, and Samuel is also working there. So Samuel, I'll just let you take it off from here. Like, what's UGF and how'd you get there?
Yeah, for sure. Well, first of all, thanks for having me. Loved the first episode, so hopefully I can bring the same energy as last week. Anyway, yeah, UGF is a student-run venture capital fund. So one of the few of its kind that I've run into where we operate as any traditional fund. Like we're on Fund 2 right now. Have about 50 million AUM that we are almost fully deployed out of. And the way that works is the managing partners, Peter Harris, Tom Stringham, they handle a lot of the actual like deal sourcing, so bringing the deals that we get to look at. And then as an intern at UGF, you get to go through and actually work on the analysis of the deal, the due diligence, which is very atypical from I think anybody's internship experience where usually you're the coffee bitch or
Yeah,
you're
literally.
writing up a market map. Yeah. So it's a really incredible experience and one that I've been at for a while.
100%. Well, before we dig deeper into VC, UGF, and just your previous experience and talk about some deals, I just want to talk more about who you are. So you're in college, right? You go to UVU. We talked before about it.
Yeah. Yep. So I'm a junior at UVU. It's definitely been a bit of a winding road. So I actually started out studying environmental science at USU, another state school here in Utah. Yeah. It never really clicked in my mind to get into business or investing kind of until later in life. There were just a few other things that were pulling on my interest. And once I finally found it, it was really just like one of those euphoric clicks. I was like, there's nothing else I'd rather do with my life than, try to get into VC.
That's super interesting. I never knew that before you were in environmental science, but after you got it, so did you just go straight into VC or was it first just finance and high finance, or how did that even work out?
Yeah. So I won't spend too much time on it, but maybe to back up. So I was studying environmental science at USU, had really struggled with bipolar depression at that point and dropped out momentarily of college and was just trying to get my life back together, trying to figure out, first of all, how to figure out how to deal with my bipolar and then what I wanted to do in the future. Because I just didn't feel like at that point environmental science was a good fit for me. So anyway, my uncle was just, thinking of me, sent me a book to occupy my mind. And it was like the equivalent of like USA Today for stock investing, like very like technical chart focused, like horoscope of investing sort of thing.
Yeah.
But it got the ball rolling as far as like, oh, wow, this is something that I really want to do. So eventually I enroll at UVU. I'm looking for like high finance clubs. And I run into, it's like a club of 5 people, 2 of which are like the people leading it. And it was like an investment banking club at UVU. So the 2 guys there, Mark Brown, Carson Gilbert, like I credit them a lot with me finding VC as like my career path. Introed me as far as like investment banking, but also one of them was working at University Growth Fund at the time. So he got to telling me about, what he did on a daily basis there. And I was like, it sounds like the coolest thing ever.
Yeah.
Like, do I have to pay to get in? Like, I'll do anything. So that's kind of the long-winded a way that I found out about UGF and VC.
Wow. Dude, that's a powerful story there. And that's just amazing that you found something that you love. Because I feel like I personally know so many people, and I personally struggled with it too, is like finding something that you really, really like and you want to spend hours and like upon hours just doing is like something that not everyone like in life actually finds the opportunity to do. So big ups to you for having that opportunity and like loving what you do. Because even in your LinkedIn bio, literally, your LinkedIn bio is "I love VC." Super simple, straight to the point, and I think that's just a great representation of like who you are as like someone in the world. It's just literally like you let your passion out there. But okay,
Thanks, bro.
that's really interesting journey about how you got there. So let's kind of dig deeper into UGF. So yeah, you gave a brief description about it. So you said UGF is a total like AUM is 50 million.
Yeah, for Fund 2, with Fund 1 as well, it's about like 80 million, a little bit above that. Um, and we're investing out of Fund 2 right now, so it's more just, the last few exits that we're hoping to.
Very cool. And how does it work? So is it like all students that work there, and like there's like analysts above them that are like full time, or is it like general partners? Like how does it exactly like what's the structure of it?
Yeah, so to break down like the org chart, there are two partners, Tom Stringham and Peter Harris, like I mentioned, and they're full time, like any other partner. It sort of like they are partners, but their responsibilities vary. Like they also have to be the chief complaint officer for all the interns, and they have to, all these extra added tasks. But outside of those two, we have a chief of staff, Lindsay, who does a lot of like the student management, and then that's it. Formerly, we had a principal who handled a lot of the deal sourcing as well, and also like coaching and working with students. Rocky Nakani, awesome guy, like one of the best people that I've had the chance to work with, and like someone who I consider a great friend. But beyond that, it's all just run by students as far as like the diligence and the coaching, and we can even take on responsibilities as far as sourcing, but they really encourage us to focus on exercising the muscle of like identifying what makes a great deal and like building out the materials that you do, when you reach an associate level, senior associate level, and whatever high finance career you go into.
Yeah, 100%. It sounds like amazing, like hands-on experience. And like, how does the decision making actually happen? Because like $50 million, like you're leaving it all to like the power of students. Is that what you're saying? Or like, how does it actually work?
Well, yeah, we do get some democratic power in there. So whenever we identify a deal that we like, we take it through a voting process. Like us as students, we get to vote on whether or not we like the deal and think it's a great investment. From there, we have some checks and balances. So we take it to our investment committee, like you do at any fund, and a lot of the time they can point out, here's something that you might want to think about. It's a much higher level thought process that you only get with decades of experience. But a lot of the time it's a conversation of what is this an investment that makes sense for UGF, and what are the risks and potential outcomes here.
And does UGF like do they target certain types of companies, or like do they target certain industries, or do they just have like a broad thesis?
Yeah, it's a good question. We're pretty agnostic as far as stage and sector, but I would say like bread and butter is definitely the growth stage, as the name would imply. And then focusing on like general tech companies. So, a few names in our portfolio would be like Toast, the restaurant POS system. I'm sure everybody's seen some of those. Flexport is another investment that I think is a great one. That's full stack software for shipping. A lot of companies like that. Probably even some bigger like name brand ones would be like Spotify or Poshmark that we've invested in the past.
And what's the average check size for like an investment for UGF?
Yeah. So again, kind of depends on the stage of the company and our level of conviction. But initial check size is anywhere from 250K to 1 or 2 million. Later stage being the higher check size. And then for those earlier stage companies, we try to reserve like a 1-to-1 for follow-on investments.
Very cool. And like post investment, do the students also like do portfolio company work, or how does that work? Like post investment.
Yeah. So that's one of kind of like the value sells for UGF, is that because we're scrappy interns, we're willing to roll up our sleeves and help out with some of the tasks that maybe a bigger fund wouldn't allocate time towards. So whether that's, market research for a company or developing some sort of like FP&A plan, we're willing to help out, and it gives us a lot of kind of hands-on experience if you're looking to go into something like management consulting. So, I mean, I think right now you're working on a project for one of our portfolio companies, right?
Yeah, exactly.
Yeah.
So it's definitely a really cool experience because not only like from the investment mentality, you're also working on like operations to like a certain extent. So it's definitely a great experience because you're getting like both sides of the coin. But it's very cool. So speaking about your experience personally, like UGF, what have been some deals that you've been hopped on, and like why did you choose to hop on them, and like what was that experience like?
Yeah. Well, I try to hop on as many deals as I can because this is just about getting as many reps as you can and developing a level of pattern recognition. But as far as like individual deals that I've worked on, some of the deals that I've worked on recently would be like Limble, which is probably a company nobody's heard of. But they're a maintenance management system they're a software maintenance management system. So what that means is like if you're the maintenance guy at a hotel, you've got to keep track of like HVAC systems and the washing machines as far as like keeping up to date on maintenance. And traditionally what you would do is just write that down on a piece of paper or sticky note. And that's obviously a super ineffective process and leads to, like millions and millions in terms of damages due to not keeping up on the maintenance and just like totally ineffective process. So that was one that like initially I thought, wow, this sounds so boring. Why would anybody need this? And you dig into it deeper, and it's like, wow, you could save people a lot of time, big ulcer off their chest if you just develop some sort of software.
Cool. Very interesting to see, like, yeah, the different types of deals that definitely go through like the pipeline at UGF. So I feel like for this next section, I feel like we should dive into like, kind of like the deals section of like talking about management team competition and just what are the things that are attractive to a VC and kind of talk about the highlights and risk of each section. So just go ahead and start with like management team. As a VC, what things do you look for in the management team, and what things do you try to not like? What things do you stray away from?
Yeah, definitely. So I think the management team, no matter what stage or sector that you're working in as a VC, is the most important aspect. Because it's going to be the only constant coefficient in any deal, right? Hopefully, your management team is sticking around. And as time goes on, your product changes, the market adapts, like your competitors fall out. The management team is always going to be there. So when you're looking at a management team, and I'm going to draw heavily on the experience of other more successful or more established VCs than just a lowly intern like myself. But I think of, someone like Keith Raboy describes it as this intangible, spark. Like you get into a room with a founder, and within 3 or 5 minutes, you know that they were put on earth by God or whoever to create this company, and it's not an A/B test or some sort of like, oh, they check like these boxes. You just know. And there have been a few founders where, whether working on a deal or just listening to their content, it's like, wow, they were absolutely made to build this company. So I think it maybe a more tangible way to look at it would be, and this is another sort of identifying process that an investor, Trip Jones, has, early stage tech investor. And he describes it as this sort of clarity of vision, where if you can sit down with the founder and they can describe very clear in terms of where this product ends up and work backwards from that to where the company is now and the steps that it takes to get to that endpoint, then they're a founder that is really going to nail this business and create a lasting change in the market. So, and I think there are some other things, more specific things that you can look at, but the management team is just it's just like identifying a person, or, whether it be a spouse or a coworker or a partner. A lot of that, it just depends. And
Yeah.
it's just one of those muscles that it is very indescribable.
Yeah. And a kind of a follow-up question to that: how important is the education of founders, like when analyzing co-founding teams? Like, it does that Harvard and Stanford symbol matter? And also, like, how important is their previous experience? Like, does it matter if like they had like experience in like Fortune 500 companies or that type of stuff? Is it essential?
Yeah, that's a great question. So, as far as the education aspect, I would say not so much. It's not that it's a bad thing, because like if you're getting into Harvard and Stanford, you're probably a driven individual, right? Unless your parents got you in because they have the plug to get you into an Ivy League. But most of the time, you're like a Peter Thiel. You're a very smart person that was driven enough to get into an institution like that. More and more, I think education matters less, and it comes down to your experience and like it beyond the resume. I feel like within our lifetime, school, especially like these Ivy League institutions, will carry a lot less weight than they do right now.
Yeah.
But as far as like the experience of working in a Fortune 500, I don't think that has lost its polish at all.
Yeah.
In a lot of cases, I think that leads to the sort of earned secrets that you want to find in a founder. Working at this Fortune 500 company, the founder realized like, oh, this process sucks. Like this is the business that I'm going to create to go and solve that problem. And there are countless examples of people like that.
100%. And speaking also on your previous experience, like, has there been a time where you kind of believed in a co-founding team and they kind of didn't fulfill your expectations? Like, obviously, you don't have to mention names to not breach that NDA, but just kind of giving a high level of like a story or scenario that could have happened.
Yeah. I can't think of a particular one right now, but I think a lot of the times it's like a middle ground of sorts, where if you're chasing the most experienced management team, there can be some detriments to that. They may not be as driven or as scrappy as the founder who is unproven and comes from a non-target sort of scenario.
Yeah.
They probably don't have the same chip on their shoulder that they once did, or they're very used to the process of an established business and enterprise now.
Yeah.
So I think it just sort of depends. But there are plenty of cases to the antithesis of that. You look at Frank Slootman, the CEO of ServiceNow and formerly Snowflake, well, formerly for both, but he went from ServiceNow, turning that around from a good company to an amazing company, and then went out and founded Snowflake, which is one of the most highly valued database companies. So,
yeah,
it just all depends, right?
100%. Yeah. And now, kind of to move on to like the market section of a deal, what drivers, or to better state it, what things do you look for in an anticipated market to actually like kind of make an investment thesis come to life?
Yeah. So, traditionally, when you're looking at a market, right, you want to size it. You want to get an idea of how big this market is and how much it's growing. I think that's actually a dangerous, or can sometimes be lazy practice. And what I mean by that is, when you go about like sizing a TAM, you're doing this all in the rear view window, right? But when you're looking at a startup, this is hopefully solving something for the future and is going to change the behaviors in that market. So if you're taking into account how big the market is right now, you're likely underestimating this on like a magnitude, an order of magnitude, I should say. So I think when you're looking at a market, you should be more so looking at what are the current behaviors for these target customers. Why are they demanding change in this market, and how is that going to change over time? I think a great investment in that sense has been something like a hip camp. You know, for a long time, people wanted to rent private land outside, but didn't really have the process to do it. So they sort of had to mishmash it together, call people up on the phone. But there was no platform for that, right? And it took until like you actually developed a platform for the demand to really unlock. Once you actually have the supply. And I think when it comes to not just a market but companies in general, the market trends themselves can be a little dangerous to latch onto as well. Like, hey, I'm gonna steal heavily from a quote from Mike Moritz where he says, the VC game is a lot like bird watching. You don't go out bird watching to look at the whole flock. You're hopefully going out bird watching to find a specific bird. It's very different and unique from the flock as a whole. Yeah. So, like, if you're an investor that's just like, oh, crypto's great, millions are flowing into it, like, let's just put our money in there. You probably got burned out in this last cycle.
And I know you definitely analyze so many like pitches. What's the number one mistake you think founders make when it comes to sizing markets?
Yeah, founders are always going to overestimate their markets, and I don't think that that's their job to do so. I would rather them, again, sort of help me understand their thesis or their thought process behind the behaviors or what's driving, that market to expand from where it is today. It's not a bad exercise. It's sort of akin to them forecasting their own financials at the Series A stage. Like, I'm going to discount what they are forecasting for their TAM and their financials, but it's helpful to see them go through the exercise itself,
100%.
Just to see where their thought process is at.
100%. And when do you think is or talking about compound annual growth rate a little bit, what's a good percentage do you think, just like a basis percentage for any investment, would you consider safe to a certain extent?
Yeah, I think rule of thumb is that you want to invest in something that's growing like over 7%. Definitely nothing that's growing less than like the annual GDP growth rate. But again, I mean, this is just one of those things where you're hopefully going beyond the numbers of how fast this market is growing, right?
Yeah.
Like, if you were to look at the CAGR of like the defense industry or something like that, you may not have invested in Anduril, which is $10 billion company right now. Yeah. But you probably would have looked at like the CAGR for the crypto market, and you have been like, wow, this is growing at like 30% or something insane.
Yeah. 100%. And now kind of take it a little bit to competition. What do you think when founders are showcasing their products to VCs, what advice do you have for them to give that, like, the pitch that's super differentiating? And for them, what's the best way for them to showcase their differentiating factors?
Yeah, I think this is a really important aspect to very clearly identify how you're differentiated. And, like when I'm getting pitched, whether it's at UGF or like other internships or obligations I've been at, I don't want to hear that like, oh, we have no competition. Like, just be honest and upfront. Like, that'll go a long ways. Yeah. But also be confident. Like, you should identify, like, here's our biggest differentiator, and this is why we're going to beat the competition. This is maybe where we're falling short, and these are the steps that we have to solve that. Mm-hmm. That would be the simple advice that I give.
100%. And to kind of like take it a little bit back to market as well. When it comes to kind of like oversaturated and saturated markets, and like how much competition there is in that market, what kind of things do you look for to know, like, is it too late to enter with an investment or to enter the market with a product, or is it too early maybe? Like, what's the timeline and what kind of metrics do you look at for that?
Yeah. So, I don't know if there's any specific metrics that I would pinpoint on that. As far as like entering an oversaturated market, I mean, just really identifying if this is something that's 10x better than what is currently out there. If it's just a simple, 1x step up, even though it's better than what's out there, the users or customers probably aren't going to migrate to a solution like that. So in an oversaturated one, I'm definitely looking for something that is disruptive. In a greenfield market, I mean, I'm just looking for a company that can really expand and take in a lot of the value capture for a market like that.
Yeah.
Take like any vertical market right now that hasn't really been broken into.
Yeah.
If they can build a product that is some sort of wedge, and then really layer on the revenue from there, that's something that I find particularly interesting.
100%. And also, yeah, like what are your thoughts on that? Like for that founder that's pitching, like there's not a market for this, but we're making it.
Yeah, I mean, just show me the product.
Yeah.
I'll believe it if they can really sell me the vision. That's is sort of what it all comes back to. If you can demonstrate in whatever way it may be, whether it's the ROI or the time savings, or really like sell me on the pain point, hopefully it's one that they've experienced themselves, then I'll totally buy into the fact that this is a product that's going to solve for the market.
100%. Yeah, I definitely agree. And going to financials, what's the biggest red flag when analyzing a potential investment's financials that you stray away from?
Yeah, well, as you start to get later and later in the company's life cycle, I think that's where the calculus shifts to, is the financials. So if you are getting into that later stage, there's a lot of red flags that you have to look out for, whether it's super low gross margins or they are just like burning a ton of money and aren't going to ever hit cash flow positivity. Those are some of the biggest red flags. I think on the earlier stage, just getting to that level of traction as far as product market fit is one that's a difficult task. So it depends on the company, but if they're struggling to hit that $10 million mark, it's probably time to have a sit down or conversation and really reevaluate the product.
100%. Yeah, and also like when it comes to valuing the companies, especially in the early stages, that can be really hard. And even for the founder's perspective, it can be really hard. What advice do you have for founders when they're finding like that number for their company?
Oh man, I mean, definitely don't shoot for the highest value term sheet.
Yeah.
As enticing as that may be, it in a lot of cases is going to set you up for future failure. Just always search out the most fair term sheet that you can, and the number is going to vary company to company, but if you're going for the biggest one and you can't hit the metrics that keep that momentum going for the next round, then you're going to have a down round or a bridge round, and for a lot of companies that can be a nail in the coffin.
100%. Yeah, and to take it back also like to the valuation over the financials. What advice do you have when it comes to kind of presenting that in pitches? Like, what metrics do you think they should present to showcase their financials the best?
Yeah. I think there are several, and again, it's going to depend on the company or industry, but your growth is always going to be an important one, right? And especially early on in the company. How efficiently you're growing. So your gross margin, your LTV to CAC, your CAC payback period. Those are a few just that can span a lot of industries that investors like to look for.
100%. Yeah, and when it comes also to like the exiting of a company, how do you determine as a VC what exit strategy would be best for potential investment?
Yeah, I think it just depends on the industry. I mean, technically speaking, like an IPO is always the desired outcome because it's going to be the biggest, but that doesn't make a lot of sense for a lot of companies. And you can still have great outcomes from businesses that get acquired. Deciding which one is right for the company, you've just got to think about what the market potential is there. Can this company get to 100 million plus in recurring revenue? Does it have sort of that rule of 40 that is kind of the consensus for a strong tech company in today's public markets? If it can hit those criteria, then yeah, an IPO is probably the right path.
Yeah. And since like an average investment in VC is like 5 to 7 years or sometimes 10 years, how important is it for you as a VC to know like the company's strategy and plan, and what's the duration of that? Like, should the company have a plan for like the next 15, 20 years, or should it just be for the next 2 years? And how important is that?
Yeah, I mean, they should definitely be thinking about it. If anybody had a plan for the next 15, 20 years that actually came to fruition, I mean, they should be a fortune teller because that's damn near impossible. But it's definitely something that they should be thinking of, long term and short term, as far as their exit strategy and just the strategy of the business as a whole. It's with relation to like the business exiting. I mean, that's becoming increasingly more important. So many more companies are staying private for longer. So it's important to know if this company is eyeing to IPO, or because of their valuation, they basically have to IPO, then that's something that you need to know, because I mean, you could be sitting on an investment that won't ever go public because of that.
100%. So I think we covered a good amount of the actual deal section. So let's take it back to your personal experience again. What's one investment that you guys like that you passed up on, but you wish you had never?
Oh man, there's so many. And I think there are deals that you can pass on that turned out to be great, but you passed on them for the right reasons. Is kind of like an oxymoron as that sounds. It, and this is where it's tricky as far as, I don't know how much I can disclose or not, but there was a recent deal that we are looking at in the vertical market, of like dental software, specifically dental procurement. I think it's an awesome company. Love the management team. And it's just one of those vertical markets that I think has been super neglected and has been, borderline predatory for the customers. And this company was solving a lot of those issues and had plans to really dominate the market as a whole beyond just the procurement itself. So that's one that I wish we had the opportunity to invest in. There have certainly been some bigger name companies that we've had the chance to look at and passed on it because couldn't quite get there on the valuation, but the business is an incredible one. And those are ones that I'm okay with passing on. I don't lose sleep over those.
Mm-hmm. That's awesome. And taking it back to you as well, like what's next for Sam Brown? What are you trying to do?
Yeah, it's a good question. I mean, my end goal is to eventually, be a partner at a fund, or even be the managing partner of my own fund. So I try to work backwards from that, not just in my career choices, but a lot of everyday choices I make. So, as insane as it might sound, I go to the gym with the perspective of, if I don't go to the gym, I'm not going to be able to think clearly enough to make solid decisions in investing, or stuff like that. So as far as next steps, short term, I'll be interning with a local earlier stage fund, and hopefully I can find a portfolio company that I like and love the vision there, that I can start working there after graduation, and from there work up the traditional path towards my own fund.
Yeah, for sure. So so you're trying to go into operations? Is that what you mean? Like a little bit?
Yeah. So and yeah, maybe that's where it sounds counterintuitive to some, but a lot of people, I should say, I don't think you can be a good VC without having some sort of operations experience, because not only do you have to empathize with your founders who are running the business, uh, it'll be a little sterile if you've been an investor your entire life and can't really talk through the challenges they're facing. It gives you insight into kind of the thought process and the strategies that take place within a business. So I think that gives you a lot of experience for a lot of different reasons.
Yeah.
Not to say that there aren't people. I mean, there are people that have never worked a day in their life at a startup. Our one of our partners, Peter Harris, never had any sort of operational experience. Did a very brief stint in investment banking, and is an incredible and talented VC in my mind.
Yeah, 100%. So to kind of take it back about like your journey and your path, like not only like why did you choose VC, like why do you even like VC? Like what about it like kind of gravitated towards?
Yeah. So, I think it's just one of those where it fits my personality. And my personality has always been very much that I have a chip on my shoulder and very opinionated and also very curious. As far as the curiosity thing, I mean, like, I just always wanted to read when I was little, and kept that trend all throughout high school and college. Just love to take in as much information as I can, and I don't like to sit still either. So I feel like VC kind of is the perfect opportunity where one day I can be learning about, dental SaaS, and the next I can be learning about, rockets.
100%, exactly. Yeah. I can definitely relate to that. 100% me as well. I was definitely that child that never sat, but I literally like was all about curiosity. Like in high school, I literally won an award. They called the Curiosity Award or something. I didn't even know why I won it. But yeah, 100%. I feel like the number one like character trait that's needed for VC in particular is curiosity. I think it's like the fuel behind it.
Yeah, absolutely.
100%. Okay, so for this, oh, actually no, one more thing. I just wanted to talk about like a big technology that's been on the rise. Obviously, everyone's talking about it. AI. What are your thoughts on it? Do you think it's good, bad? Share some thoughts.
Yeah, definitely. I think that this platform shift carries a lot more weight than crypto, or even to an extent consumer social. I don't think consumer social was as big of a shift as it was thought maybe in its heyday. I mean, obviously we have Meta, which is one of the largest companies in the world, but I think AI has a lot of the same potential that .com did and beyond. I think the one caveat that I would put behind that is a lot of investor expectations, or even expectations from the general populace, is that it's right on the horizon. And I think that, generally speaking, with any platform shift, it's always overestimated in the near term, but underestimated in the long term. So, like right now, a lot of AI tools I see they're awesome. I mean, fun to play with, but a lot of them are novelties, at least in their current state. I don't know if you ever ran into Udio, but it's just you can type in an AI prompt, for a song. So like a blues song about Yahia, and it'll spit that out for you. It'll have like a pretty complex song.
Oh yeah.
But as far as like applications to the enterprise space, I think it's 90% of the way there, but that last 10% is sort of like the devil in the details. If it's not 100% there, you can't really use it effectively.
100%. Yeah.
So,
have you ever had like a goal of having your own startup? Not only like going through the realm of like operations, but like have you ever had an idea and have you ever tried to tackle it?
yeah, I've definitely had ideas. I think the one prohibiting factor, and Wei Lin would probably chastise me or not, taking this on because I think what she said was the 1% of founders are just the people that took that risk and jumped in.
100%.
I just don't think it's a personality that I have to be a founder. You know, I feel like you can have the same level of insight, but very different personalities, and that's a lot of the time what I think separates investors from founders.
Yeah.
I could be totally wrong.
Yeah.
There are plenty of talented founders, I should say, that have made for excellent investors.
Well, I think it's about the dynamics of the founding team. If you find the co-founder that kind of supplements your character, I feel like that's something I could kind of battle that. But it's really cool to hear that you've had previous ideas before, and that one day maybe that might be the next big $1 billion company, next unicorn.
Yeah, maybe. Yeah.
We'll wait to hear. Awesome. Well, for this next segment, it's gonna be quick fire. So I'm gonna ask you a bunch of questions, answer them as quick as you can, and then yeah, that's basically it. Sounds good.
Sounds great.
All right. Favorite book?
Oh man. Probably Shoe Dog.
Yeah.
Yeah.
Favorite
It's a
song?
classic. 43 by Kenny Mason. Easily. Anything by Kenny Mason.
Who do you look up to?
Oh man. Michael Jordan.
What's the best piece of advice you've ever heard?
Oh man. Just to never give up. I mean, pretty basic advice, but it
Mm.
stuck with me.
What's the worst piece of advice someone's ever given you?
Oh man. Just go to school to get your degree.
Yeah. What's one investment that you wish you could have made?
Oh man. Well, I don't know if I've had a lot of at bats as an intern, but um, oh man. I guess if we're playing hypotheticals, would have loved the opportunity to invest in SpaceX if I was given the chance.
Yeah. Um, who's one founder that you look up to?
Oh man, so many. Probably Delian at Barta.
Yeah.
He's a pretty incredible founder. There are so many though. We could spend 10 minutes talking about that.
Who's one VC that you look up to?
Oh man. Spend 20 minutes on that. I love Keith Raboy's philosophy a lot.
What's next for Sam Brown?
Oh man, what's next? Hopefully working at a unicorn of a portfolio company.
Yeah. Awesome. Well, that's it for the quick fire segment. Usually with founders, the way that I was planning on doing it is I have a 3-minute segment where we make a business on the spot, basically. So do you think I should do that with VCs as well? Or no?
Yeah, we can give it a try. I don't know if I'll have enough insight, but we can sure give it a try.
Let's do it. All right, I'm going to set a timer on my phone for 3 minutes, and hopefully by the end of it, we'll just have an idea that we can start to tackle and see the next steps.
Sounds good.
All right, 3. Okay, 3, 2, 1. Started. What's the industry? Right. What are we going to do?
Well, the idea that I've had in the past was like linking up patients with like mental health care and insurance. Because it's like it's super impossible to get like mental health insurance as like a student or even someone that has general health insurance, and then finding a care solution in and of itself is super difficult. What do you think?
Are there any like competition in the industry right now? Is there any players that are doing the same thing or no?
Yeah. So there are definitely some that are targeting like, match you up with like a therapist using like our AI platform and based on like this criteria, like here's a therapist who would work well for you. I think the missing components are like beyond therapy, like here's, maybe instead of like an SSRI, you could try out, a non-typical, like ketamine therapy or even the component that I don't think a lot of people would consider is like the actual insurance of it, because when you find a therapist or care solution, it's incredibly hard to actually pay for it.
100%. Definitely. It's definitely a problem and there's definitely a need for it. So what next steps should we take to tackle this issue, or like how are we going to differentiate ourselves from the competitors in the industry right now?
Well, I think the piece of differentiation is including that insurance component. Because if you can't pay for it, you're missing out on a lot of locked supply. Um, next steps, though, I mean, that's pretty tough. I feel like you would have to start out by just offering the, matching care provider with patient, and then you would have to build into the insurance side of things. So
Okay.
it might be a little difficult.
What's the name of our service? What's the name of the
What's the
company?
name of it? Oh man. Well, I'd love to call it Plank.
Plank?
I had a friend of mine. His design company was called Plank, and unfortunately, almost a year ago, he took his life. So,
Oh, sorry to hear that. Well, Plank. Okay, we're gonna honor him through this company. It's gonna be called Plank. I guess the next steps will be maybe schedule some feedback calls to hear back about like the people that have really been experiencing this issue and really kind of get as much detail and insight as possible what's been going on.
yeah. Who knows?
Yeah,
I don't know
yeah.
if I'm a founder, so
Well,
we'll
hey,
see.
you might have to start Plank now. The
Yeah,
timer ended,
maybe.
but hey, you have the idea. You have Plank. Thank you, everyone, for listening. Sam, thank you so much for hopping on. We hope everyone that was listening got some insight, a little bit about VC. And for the founders listening, as much advice as possible to strengthen your pitches, your pitch decks, and strengthen your business model overall. And for all the VCs, hopefully you got some insight about what companies to analyze, or like some advice about companies to analyze and things like that. So again, Sam, thank you so much for hopping on.
Yeah, thanks so much for having me. This is
Yes.
great. Hopefully, I didn't give anybody some terrible advice.
Nah, for sure not. Well, see everyone on the next episode. Looking forward to talking soon.